When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip is with Blue Reef Agri Marketing out of Horton, Illinois, and he's nice enough to come on and talk about what's happening in the marketplace. Chip, how you doing this morning?
Doing well. How you doing, Casey?
Rough start this morning, man. I don't know what my deal was, but finally got it to roll out of my mouth.
Couple for the bloopers reel.
Ain't that the truth? All right, man. Well, just talk a little bit about this week so far. We've had a hot week about everywhere in the middle of the growing cycle, and we've had the Pro Farmer crop tour going on. So let's sit with the crop tour first here. To me, I think when I look at this tour, I think it was very anxiously awaited because of the back and forth with the USDA that we've seen, as well as the reports you get. You got guys across the road from each other. One guy's got the best crop he's ever had. The next guy over here, that's just a mile or two down the road, has got a crop that he's not for sure if it's even going to be worth cutting. So I guess, we've had this whole thing come through. Chip, as you're taking a look at the results of the Pro Farmer Tour, what are your thoughts there? And do you think there's anything in it that is going to make the market significantly move over the next week?
Well, I think the three things that jump out, there's three things that jump out to me, and I think it is affecting the market somewhat. The first thing that jumped out at me was that Illinois was as good as what they found, right? They had Illinois about a bushel above a year ago, and we had a massive crop a year ago. Now, granted, they're not covering the entire Corn Belt. They only cover about, probably just slightly less than half of the state of Illinois, the northern half. Some really good ground, and that's an area that received some really beneficial rainfall here in late July and the first week or so of August. That's the first thing that jumped out at me, that Illinois was as good as they say it is, better than a year ago. The second thing that jumped out at me was how poor Nebraska, the western half of Iowa, and Minnesota are. Not good, particularly Minnesota. That's the fourth largest corn growing state in the country, and did not look great to me. The third thing that jumped out were pod counts, right? And that is always, a dicey subject, right? Because it's really hard to peg bean yields. In fact, that's why they don't try. They just do pod counts. But what you have with that is the data from a year ago, and they put a 3-year average out, and it was a little bit of a mixed bag. Some areas had really strong pod counts. Some areas that were, on the drier side, like those areas of western Iowa and southern Minnesota, had some pretty anemic looking pod counts. I think overall, though, and we're going to get those numbers, the entire data series, after the close today, and they put out their national average corn yield. But I think, to me, it says that we're probably somewhere in the low 170s on corn, and I think the market's maybe trading, kind of where the USDA put it out in August, and that's kind of right in that 175 range. But to me, it says maybe we can slip a little bit lower on bean yields, and there's just no margin for error on the balance sheet. We continue to sell beans. We're continuing to sell meal. Crush margins are like record high. So it's a margin business, and the soybean crushers, end users, they're just going to keep buying beans to crush them all the way up to whatever, $15, $16, $18 if it's still profitable. And so we haven't rationed that demand yet. So that's the thing that out of the pro farmer, the three things that hit me. And then, of course, the other thing is this record heat that we're having.
Yeah.
And it's been pretty dry. So you could still take maybe the top end off of these corn yields, especially later planted corn. And there's a lot of it out there. And, see some taken off the top on bean yields as well. And so, I think it maybe puts a little bit of a floor underneath of us with what they found. Certainly the next 2 weeks, I think if it cools back down and we get some rain, maybe the market's going to assume that crop's going to stabilize and can maybe get a touch bigger. If we go out, the rest of September and the last couple of weeks of August with no rain, you're probably going to have the market thinking we're going to shave the top end back off. So the weather still matters, but I think Pro Farmer Crop Tour at face value wasn't bearish compared to where the market was expecting. Maybe puts a little bit of a floor in on the setbacks and opens a door up that maybe beans could have some upside here if we continue to see dry weather in August and the first 10 days of September. And, September 12th is the next USDA crop report, and that's going to be a massive one because they do actual field surveys as well to kind of, see if what Pro Farmer found is, consistent with what USDA is finding everywhere.
Yep. So let's talk about soybeans for just a minute. So a lot of reports out of that Pro Farmer Tour, they were talking about pod count, and there's a lot of areas where the soybean pod count was in danger of actually seeing some stuff get aborted because of heat and because of dryness that we've seen here this last couple of weeks, depending on where you're at, different stuff, different places. You watched the soybean market over the last couple of days, and you saw some pretty healthy jumps, you 10, 11 cents a day type of thing, even a couple of days where it was above that. Looking at the soybean market, Chip, because it just seems like the corn market has hit at a stall point, and there's just nothing, there's no news that's going to move the corn market past where it's at right now. It's kind of bouncing back and forth between that, that low 480s to mid to low to mid 490s as you watch it kind of slop around back and forth. Does the corn market need the soybean market to really explode so it can bring it up?
Yeah, I think in a lot of ways the corn market, we're trading more about the bean market and the wheat market than what's happening in corn. Yeah. It seems like, to your point, that we get down in the the 470s and you uncover a lot of buying and some end user interest, but you get up closer to $5 and you're seeing some selling pressure. Part of that, I think, is because the wheat market has just been a dog, an absolute dog. Now, it is maybe showing some signs that the wheat's found a value area and at least stopped going down, maybe trying to build a base for a bottom. And if that would be the case, that could take a little pressure off of corn. But to your point, I do think that beans are still a wild card in here. There's still good demand, even at, near $14. We're continuing to sell beans. We're selling a lot of meal. And I mentioned those crush margins are just massive right now. And so the demand's still there. And you can argue that it's tailed off in corn. Would not argue that myself, but I think maybe we've kind of traded a lot of that as well. So in order to get corn, kind of bouncing in here, I do think if beans would put a rally in north of 14 and, maybe push up towards 14.5 or higher, that would help drag corn along with it. Or if you get into, the last part of August and right ahead of the September crop report, and we haven't got much more rain, I think the market will start assuming that, we've shaved the top end off of yields and maybe we could drop corn to 170 or slightly under. And that becomes, not wildly bullish, but something that maybe we're, too low if we're going to be at or below 170. So that question's still out there, but yeah, there's just seems like there's not a lot of interest. The funds are comfortable holding their short position right now in corn and wheat. They're comfortable getting longer beans, and that seems to kind of be the trade right now. But if beans would take an extended rally here, back well north of 14, I think that's going to, drag corn along with it, kicking and screaming.
Yeah. Okay. All right. You brought up the wheat. Let's talk about wheat a little bit. Russia is doing everything it can to just basically isolate itself from the rest of the world when it comes to how it's discussion with wheat. I mean, you had several, Turkey and I can't remember who the other countries were, but they got together and they're going to talk about, with Russia sending wheat into Africa and kind of helping some of those humanitarian efforts that we need to see happen in Africa as we see food shortages and those things pop up. And Russia kind of walked away from that deal saying like, well, not my problem. You guys figure it out. We're going to go back and do what we do. As you look at this, man, is this withdrawing from basically the world and becoming more and more isolated and then just laser focused on selling wheat, whoever wants to buy it for as cheap as they can sell it, and same with oil and those kind of things? To me, it looks like Russia has kind of hit a point of we're going to start making some tough decisions about either some kind of a peace agreement or something grander than what we've already been doing, I guess. So I guess what's your thoughts there, and then the impact that you see on wheat from it?
Yeah, it's such a wild card out there, Casey. So many moving gears. I think that Russia, first on the Black Sea deal, Russia, it benefits Russia because they're still putting stuff out on the market. Other countries will buy their wheat. They still have wheat for sale. Now, insurance and transportation costs have skyrocketed, so all it's doing is just transferring, that to the end user and making that wheat that much more expensive. They don't have a never-ending supply either, and so at a certain point, they're going to have put out on the world what they, have as far as supplies, and things are going to start tightening up. And you may have already started to see that a little bit. It does seem like the narrative. I don't even watch the news at night. I don't think that's even remotely close to the truth. But you can kind of see through the headlines that the narrative's starting to change a little bit, right? Like, would not surprise me that they're positioning for some sort of peace in Ukraine. Now, immediately that would be maybe a little bit bearish to wheat because the market's going to think, oh, everything's great, and Ukraine's going to bounce back, have this massive crop, and blah blah blah. But the reality of the situation, in my opinion, is that it's going to take a long time, to get back to normal, whatever normal is over there. In the meantime, Russia continues to bomb export facilities, grain terminals, the Danube River terminals, which is, one of the only other ways that Ukraine can get grain and supplies out of the country through Europe. They continue to bomb those. They bombed some earlier this week or over the weekend. And so they're not going to let up. They're going to make it as difficult as possible for Ukraine to export what they have. And let's not forget that, they're planting essentially a half of a normal crop, or probably less than half of a normal crop in Ukraine. So they're not going to have a huge supply to put out anyway. On top of that, you've got all these issues popping up very quietly. China's had horrible growing season. They're on the same northern hemisphere schedule as we are. They've had everything: massive record flooding, record heat, record drought. They don't have a good crop. There's no way they can, even though they're going to lie and tell you it's record. It's not. Their actions already tell you that with the amount of beans they're importing out of Brazil, and still buying our beans, by the way, at $14. So that's a problem. Argentina, it's their winter time frame, right? They haven't fixed their drought problem. They raise a fair amount of wheat. That's probably somewhat in jeopardy. And there's some dry pockets popping up in Australia. So the market hasn't even begun to think about that. They just think, well, Russia's got this never-ending supply of wheat. They're putting wheat out, keeping prices down. That is true. And that's been part of the issue with the wheat market. But you could wake up one day and the wheat market would all of a sudden have a different feel. And, like it got a lot tighter in the world. And that might be what is the final straw that pushes these funds out of their massive short position and causes a big rally in wheat. I don't think that's days away. It might be weeks to, 2-3 months away. But the first thing that has to happen is wheat has to stop going down. And it may have, entered into that phase this week and last week. We'll have to see how we close this week and kind of act next week. But the wheat market is kind of showing some signs that maybe it found value, stopped going down, and then the next process is we kind of base for a little while and then try to rally if we get some bullish news that the market focuses on.
Yep. Sounds like a lot of stuff to worry about there. So, all right, let's jump over and talk about what's happening in energy market. And as you take a look at two things. One is if you take a look at what's happened in natural gas has kind of just been there. It's not really done anything since its huge run up and then, subsequent run back down after COVID, after we saw this big worry about natural gas. As you take a look at what you see happening in oil right now, oil broke out of the 70s and it's been doing the exact same thing it was doing in the 70s and the 80s, kind of bouncing around in that mid to high 80s range as you're looking through that. As you look at oil and natural gas, Chip, what are your thoughts?
Yeah, I mean, I think as you look at the oil market, I think that drives a lot. Natural gas matters, but that seems to be, kind of a secondary thought. And I think that the oil market, has shown signs that we've got some issues here and could maybe push up into the mid to upper 80s, potentially going into the winter time frame. Now, I do think there's a lot of outside market influences going on. We've got the Jackson Hole meeting going on, I believe even today. So Federal Reserve Chairman Powell is going to be speaking. There's a Fed meeting in September. The market's very mixed on whether they're going to continue to raise rates or take kind of a pause approach. I think that they've told you all along what they're going to do, and I don't know why they pause. The economy still looks quote unquote good on paper. Now you've also seen some rumblings out of China and some issues there. They've been kind of making some currency moves that has caused a little bit of a disruption here, and that's caused the crude oil market and the energy markets to pull back just a little bit. It caused the grain markets to pull back a little bit last week on these Chinese fears. Are they going into this massive recession? But there's such a controlled, communist country. They're not going to let the ship go down that easily. And so what they're going to do, they're going to throw everything they've got at their economy to try to keep it growing. And that could be actually stimulating long term. So there's a lot of moving parts here in the financial side that's affecting the energy markets as well as our grain and livestock markets. That may continue to add some volatility going forward. But to me, it looks like, barring some sort of massive economic meltdown across the world, that the path of least resistance for the energy markets, crude oil in particular, looks to me like it's higher, maybe getting up into the upper 80s, challenging 90, by the end of the year or in the first quarter. And all that's going to do is just continue to fuel inflation fears. Mm-hmm. And it might become a little bit friendly for our corn and bean market, right? Because I mentioned crush margins. Ethanol margins are okay. They're still grinding, a fair amount on corn, hitting the numbers we need to. Our renewable diesel's exploding and the crush margins are massive. So if you continue to, slowly grind these energy markets higher, crude and unleaded in particular, that's just, going to be another bullish factor potentially for the bean market and corn as a kind of a lesser impact. So very much matters, but there's a lot of, volatile moving pieces. We've continued to say it, but there's just so many moving parts here that is just impossible to predict. The world economy, the war in Ukraine, obviously weather here with our grains, and just so many things going on, and it causing this volatility. Look at beans. Yesterday was a quiet day. We had 3 round trips from the low to the high. I mean, it just it is a choppy time frame out here in all these markets right now.
For sure. All right, Chip, good stuff as usual. Folks want to reach out to you and get more information about what you're doing over at Blue Reef Agri-Marketing. What's the best way to do that?
Yeah, best way is just give us a call at our office. That number is 309-550-7213. Love to chat with you. A lot going on. A lot of crop insurance decisions right now potentially as well with how that figures into your risk management plan depending on where you're at and what your yields are. So love to chat with you. Give us a call.
Right on, man. Chip, appreciate you being on the podcast. We'll talk to you next week.
All right. Thanks, Casey. Have a good weekend.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast, and go over to the YouTube channel, which is the Moving Iron Podcast YouTube channel to see the video version of this podcast there. Go to Moving Iron LLC for everything Moving Iron related, and MovingIronLLC.com, that is, for everything Moving Iron related. And we get all the different blog posts and all the fun stuff that's up there. So check that out. So with that, I'm Casey Seymour with Chip Nellinger. It's going to be Sparring, folks. Out.
Moving iron in the 21st century.